Hey, come here and check this out. I'm going to show you a super easy trick that you can use to distinguish if A, Bitcoin price is going to pull down your altcoin prices even farther, or B, if this is a buy the dip situation for the altcoins that you cherish the most. All right, you ready? Let's dive in. So what you're staring at is the daily chart without price. How do you take out price, Tim? Well, just like this. So see where my mouse is hovering? Okay, so that's the price. Bam. So that eyeball, and you can do the same for the EMAs, right? And you can do, if you want to get really sexy, holy cow, look at my TA. It is going to go here right now. So you can take off everything and just have a bare chart if you wanted to. So I'm going to do this without price first, and that's how you do that. And EMA, if that doesn't make sense to you and you're new to crypto, but you want an easy trick to be able to distinguish this, well, first off, if you don't know what EMA is, you don't know how to set up a chart, you probably shouldn't be buying crypto. Not financial advice. I'm not a financial advisor. But if you are that person, hey, that's where I started too. When I watched videos of people like me on YouTube, I didn't know what the hell they were saying. So if that describes you, my channel and my community, like it's tailored for people like you. So if that's you, watch this video first. Seriously, it can be life-changing for you. You should know how to set up a chart, and you'll understand me better and other people who talk about price, not just like pumping coins and shilling them, which is the vast majority of YouTubers, by the way. So if a YouTuber talks about KDA or QRDO, that means the run's already over, and that's when people are selling, because that person's probably selling to its viewers, right? So people like me who talk about price, they warn you about that. So anyway, the link that's popping up right now, okay, if you're new, go click it. All right, let's dive back in. All right, so the daily chart here, here's what we're trying to distinguish, okay? We're trying to distinguish, try to look at where these cross or where they almost crossed, okay? So you see that? All right, so how do you determine if this cross is going to lead into the results of that cross, right? Or if as they cross, it's a good buy the dip, like this one, and like this one, and sort of like this one, and like this one. How do we know what the chances are of this becoming a skim play or a massive dump after a bearish cross? That's what we're going to be doing here. All right, so that means we're going to add on the 30 EMA, and that is where the magic happens. Before we do that, hey, flip your phone or get flipped off. Hey, Tim, what does that mean? It means literally your phone's horizontal right now. Flip it vertically, hit the like button, and guess what? Here's what's going to help me continue making videos for you even more. Leave me a quick comment, even if it's a simple period without the tampon. Yell your favorite food, tacos, or you yell your favorite coin, Cardano. Actually, if it's Cardano, just lie to me and pick a different freaking coin. I don't want Cardano as a freaking answer. Anyway, hey, subscribe and make sure that bell is hit. Here's why, because this is time-sensitive information. So help me help you walk through a more profitable crypto journey. We are in this together. Make sure that bell is hit, and let's dive back into the charts. All right, so raise your hand if you can see what I'm about to say, how to determine the probability of is it buy the dip or is it not. Look at the relay. So actually, let me make this a little easier. Any guesses now? It's the distance that the yellow is from the blue at the time the red comes down to the yellow. That's it. The farther away that yellow is from blue, the stronger the chance that it's a buy the dip scenario. So how far was yellow from the blue? Pretty good, especially since it just freaking crossed. It gained a lot of distance for just like barely weeks ago crossing. So all things relative, right? So Bitcoin had a lot of time to gain distance, the yellow from the blue here, a lot of time. Here it didn't. So I would still categorize this distance relatively just as much as this one, because it didn't have much time to get far above from this this bullish cross up. Okay, see that? But in general terms, the farther the yellow is from the blue, the more likely the chance is of when the red comes down to the yellow that it's a buy the dip scenario. Now, does this help you with exact level? So on leverage, does this help you with exact levels of when to buy if you're using like 25x leverage? And if you ever do that, you're silly. 4 to 5x leverage is maximum that you should be using, by the way. And if you're new to crypto, you shouldn't be playing with futures at all. You should practice being profitable for at least 6 months first. And if you break even after 6 months, that's pretty good too. Honestly, I sure as hell didn't do it. It took me a freaking year and a half to get profitable. Like, it takes a while. It takes a while because I was a stubborn son of a bitch who I knew rules, but I kept breaking my own rules that I knew were statistically probable. It takes so long to train yourself. It's self-discipline. Really. Anyway, I'm going on a rant here. So take a look. Look at this one. How close was the yellow to the blue. Was it closer than any other instance? Absolutely. And that's it. That's really the trick. All right. So you can also see, if I take off the blue, there are different types of, approaches of red to yellow. So here's what I call them. And so I will show you another trick. Oh, I need the yellow on there. So another trick is if price, it's a two-part trick. So one, view price as if it had a personality, as if it were an animal. So for example, in the movement of price. So you have to like personify it or animalize it or whatever verb. I don't know what I'm trying to say here, but personify it, make it an animal, whatever. It has a behavior, right? So whenever the red comes close to the yellow, it's almost like fight or flight, but it's flight. So an animal behaves differently when it's just eating. So like this is an animal just grazing for food, right? It's like all good, all good, all good. And price was, had a behavior up, 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 right? All good to go. But when a predator comes, like it says, whoa, 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 right? Or if a predator or the predator coming is like the red getting close to the yellow and price is down here and it says, whoa, 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 I want to undo this cross. I want to undo it, right? Like it wants to undo it every single time it happens. And it happens on all time frames. Like, so what I'm showing you, if you dive down with a if you can see me on the bottom right hand side of your screen, if you dive down with a microscope, the same rules apply to smaller time frames. The only difference is it's the power of it. It's the power of it. Like how long is that shelf life of that move after it happens, right? So with the 2-hour chart, typically the shelf life of that move continuing after it plays out is like a day and a half, right? The 4-hour chart, sometimes you get 2 days to 7 days. It's usually about a week. So the 4-hour chart gives you about a week shelf life. The daily sometimes gives you almost a month, right? And the monthly chart gives you about a year and a half. So it's the shelf life of different time frames is different. It's not just 4 hours. The 4-hour chart gives you about 5 days of shelf life. For some weird reason, that's how it works, right? After a move plays out, and then the other time frames take over, the larger time frames, right? So in here, price wants to undo the cross. It wants to undo the cross. It wants to undo the cross. And you can tell from the blue, will it be able to undo the cross, right? So that's the first thing. But what also gives you an edge here, if price comes down here, so let's put price back on. You see how price got down here? If it is able to undo the cross, so let's zoom way in. Here's one little trick. If price is able to undo like that cross, if price says, oh, I don't want it to cross, right? And it's able to get back up here before the red touches the yellow, that automatically gives you a strong edge, right? That, if your altcoin is still down after Bitcoin comes up here, that, hey, did you buy the lowest part of the dip? No, but you know that you're statistically likely out of the woods because price was able to close candles back above the red before they ever touched. See that? It was able to close candles. See these two candles closed here? Even with this dip here, you knew that this dip had so here's how you play this. If price can come up and close a candle here, you know that the next time you see a dip or a wick below, that it's probably just going to be a wick below, and that would be the dip. So, and if you zoom down on this, it would essentially be a higher low on the 1-hour chart, or maybe even up to the 4-hour chart. Let's see here. How many? So 4-hour higher lows typically take 3 days to form. Is that 3 days? Is my computer freezing? What's going on? Sorry. Was that about 4 days? Let's see here. So higher lows on the 4-hour chart typically take about 3 days to happen. I guess my computer isn't cooperating with me for some strange reason. Let me do this. Sorry about the intermission. These are technical difficulties. All right. Anyway, so about 3 times the charm. Hey, so 7 days. So I bet it made a 4-hour higher low and that dipped down. So you see this wick on the red right there? That's your higher low on the 4-hour chart, right? So do you get the ultimate dip? No, but the next dip that happens, which is essentially inevitable, that's when you want to, buy the dip essentially. You don't want to chase these red candles, just like you don't want to chase green candles, which is it's everybody does it when you're new, right? So don't chase either. Don't try to catch bottoms and don't chase green candles, right? On the way up. All right. You want to buy assets before they have a green candle explosion. All right. So let's go. So let me circle this area, take off the EMAs, and we'll see. And I'll go down to the 4-hour chart back to where I circled this. And you can see here that it was your first higher. So see that daily wick down after price closed candles above the daily, even though I'm on the 4-hour chart now, that's the dip you want to buy, the first higher low. But just remember, it usually takes about 4 days to get a 4-hour higher low. Can you buy a 1-hour higher low? Yeah, but buying a 4-hour higher low is so much safer. You just have to wait 2 to 3 days for it, right? It typically takes 2 to 3 days. And actually, let's see how long this one took from low to higher low. 4 days. Actually, 4.5. Yeah, about 4 days. So yeah, it sometimes takes 4 days. All right. So that is the dip you want to buy. So you don't know if you want to buy this dip because at that point, this is indistinguishable from this. Right? So this is where it tanked down to 29K. You don't know if that's by the dip, right? But wait 2 days, okay, the 4-hour chart. Did you make a higher low? Frick no, you didn't. You made a lower low. That's why you wait, right? So that is how you buy, like, essentially the dip with this. You don't try to catch the red candle. And if you do, you can use risk management. So honestly, I love buying the third drive down on a 4-hour chart, especially, and I bet you this had 3. So I bet you the RSI on the 4-hour chart was the lowest here. So this is bullish divergence play. So the only time that I try to catch a low is when you have specifically 3 drives down on at least the 1-hour chart. 4 hours even better. 4 hours even better. So remember, the higher the time frame, the bigger the effect it has, right? So I bet you when I put on RSI, that'll be down here at the bottom here in a second, the green squiggly line stuff. I bet you that this was the lowest low on RSI. So RSI was tanking, and then when price got here, it made a higher low. And then when price got here, it made an even higher low. So you have 3 higher lows like this in contrast to the 3 lower lows in price. So technically I would try to buy this dip if it had 3 drives down with 3 higher lows on RSI. That's the only time I like my rule of 3. That's the only time I try to catch a knife, essentially, right? Instead of buying this higher low here on the 4-hour chart, right? And so since this didn't take 3 to 4 days, I wouldn't have bought that one. I would have waited the 4 days, right? So for our chart, wait for roughly 4 days, sometimes only 3 to 4 days for a higher low, because this one typically is fake. It's just, I don't know, it's just how Bitcoin moves. So let me throw on the RSI here. And what do you know? This one, lowest low. This one, higher low. This one, higher low. So that's what bullish divergence means. Divergence just means the opposite. Opposite is happening. Lower low or lower lows, higher lows. You wait for 3 strikes. That's the only time you want to try to catch a knife. You don't. So when you see Bitcoin like dropping like this, don't try to catch that. Now, do you have to wait for 3 drives on the 4-hour chart? No, a lot of times I just wait for the 1 hour, set my stops. I know when to bail. And then I say, shit, okay, I'm not going to try that again. I'll wait. If I want to try to catch a knife, I will wait, use risk management. I'll wait for potentially either 3 drives on the 4-hour, but sometimes that never happens, or I wait for a higher freaking low. That is it. I usually only try it once, maybe twice with risk management. So I'm not just saying, oh, I caught this, wick. Whoops. Oh, I'm just watching my money go down the entire time for how many days until it recovered from there? 2 weeks. Right. And another reason is you don't know if you bought something like this. Yes, I'm a genius. I caught this wick. Oh no, not a genius anymore, right? Because I didn't follow basic trading rules. So I'm kind of getting off of the 3 EMA trick. So here is now I'm going to show you a bonus trick for a potential bear market, and to congratulate you and reward you for staying till the end of the video. So throughout my videos, if you're this far, even in my altcoin videos, I try to throw something in at the end without necessarily tags, so you don't know exactly where it is, so you watch the whole damn thing, because that helps me continue producing videos for you. Tim, you're so tricky, man. I know. I'm so tricky. All right, so let's dive into this, and let's use these 3 EMAs again, and let's put these bad boys on. And again, I'm going to use the 3 EMAs with the Russian doll trick, okay? So the Russian doll trick means zooming in using the same rules, but on a lower time frame to determine price off, put the 55 on, And here you go. So will this exact pattern work the next bear market? No, but once you see one happen, you know that the next 1 or 2 times it happens in, in lower highs, because a bear market's full of lower highs, lower highs, lower highs, lower highs, right? So, so it might not follow the red getting above the blue. That's a great time to take a short. Red getting above the blue. That's a great time to take a short. Red getting above the blue. Great time to take a short. But to take a short, you don't want to necessarily wait until these cross, because the move has like really begun. Like, you're missing out on a lot of price action, right? Like, look how much price action that is. Like from the top to here, like you're missing out on 16% of the move. So how do you determine, to short as close to the top as possible? And honestly, on this one, it would have been tricky, because this rule of red crossing blue, that wasn't established as a potential rule of that bear market. So next bear market, it might not be the same, but it's probably going to be pretty similar, right? And the blue line is pretty damn close so the daily 55 is almost always positioned very close to its weekly 10 EMA. So you can essentially view this daily 55 EMA as the weekly 10. It's same darn rule applies. So anytime in a bear market that the daily 10 gets above the daily or the weekly 10 EMA, and then things start turning around, that is when price is going to tank again in a bear market. It's just that simple. But how do you know when it's going to start tanking? Well, use the same bearish cross rule, but on a different time frame. So I will circle this, I will circle this, and I will circle this. Let's go to the 4-hour time frame and see when these bad boys crossed. Take off the blue. We're just going to look for the red, yellow to try to, get into a short, for example, about here instead of way down there where the daily crossed. We want to get in a short about right there when we know it's losing steam, and put the blue back on. We know that these are going to head back below the blue, right, on the daily, but we're going to use the 4-hour to essentially more finely tune. So imagine a dial, right? Some dials, they only have like, so imagine like the daily chart is a dial with maybe, 50 ticks, right? So to get all the way around, it's 50. But the 4-hour chart has like 150 or like 300 ticks. So it's more like all the way around instead of tick, 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 tick. So it's just more finely tuning the dial, or it's a dial that is more fine. You have to more finely tune it, right? So you can more finely tune when this is going to head around. So I've circled this. Am I on the 4-hour chart yet? No, I'm not. And let's go back in time without drawing pink lines on our chart and when we're trying to actually drag it over. All right, so here we go. And we're going to mark off where these crossed. So you did have a fake out here. So that is within. So I will mark it like this. Crossed a few times, so you had a lot of fake outs here. I will do here and here. So this is where risk management comes into play, right? You can't, it's not a perfect rule necessarily, right? Okay. And this one I did. It worked the first try. You had a skim play here. It did not cross, and then it crossed here, right? So this one actually did work perfectly. So this is why, in trading, there are 3 elements of making money in crypto or any market. Buying or your entries, selling, and risk management. So to not get totally screwed when you play, so you should, so in this rule, the on the daily chart, the red did go above the blue. You should try the short there, but you need risk management to get out of it and try it again the next time. Does that make sense? That's what risk management is all about, because even the best rules in the world don't work every time. That's why risk management exists, to know when to bail. Don't just sit there and pound your chest and say, it crossed. That's what Kosa or Tim said, like, no, don't do that. Use risk management, get out of the trade, try it the next time. You just try it every time it happens. If it's a rule, if it hits the rule, try it, know when to get out, period, right? So I have these marked, okay? Let me delete these. And now let's go back to the daily candles, to the daily chart, to see how well that would have gotten us into a position on how to make money in a bear market. So we go here, bam. Take this off. Oh, nope, that's price. Yeah, that's price. And put that back. There we go. Okay. Not bad, huh? Look at that. Look at that. So you would have shorted here. You would have had risk management got out, and you would have shorted there with these rules. But you never would have even been looking at the 4-hour chart had the red on the daily, had the red not been above the blue. So you wouldn't have been looking at a 4-hour cross here because the red on the chart. So actually I can put this back on. You wouldn't have even tried a 4-hour cross here because the red was not above the blue. You see that? Red is down here below the blue. You wait until the red's above the blue. You try the 4-hour trick, the Russian doll stuff, and that's all you do. It's another 3 EMA trick. It's so these 3 EMAs can be used in bullish moves and bearish moves. It can be used across time frames, right? But remember, the 4-hour chart has a smaller shelf life than the daily. You get smaller moves at it, and that's it. So I hope that you found this helpful, and new viewers if you did. So that's not like a schlong coming out of my ear. That is a thumbs up, just by the way. But anyway, hey, new viewers, the 2 videos that are going to pop up in about 10 seconds here, okay? If you watch those, they're going to drastically change how much money you make in this crypto bull run, I'm telling you, and in the bear market. You're going to understand how price moves so much better. And new viewers, make sure before you leave, frickin' hit that like button. And if you're already subscribed, make sure you hit the bell. Just go check. Flip your phone or get flipped off. Check to make sure the bell, put all alerts, because I pretty much make 2 to 3 videos Monday through Friday. You should watch them all, get your practice in, and we are in this together. Smash that bell so you can have the best TA on the planet. Tim, a question, is your TA really the best? No, it's probably not the best on the planet, but I think that I help educate you on how to take very simple steps. So that's what my channel is about, especially for newer folks who it's your first bull run, folks who want to make more money. I take very simple steps so you can click around with your money more strategically. That's what it's all about. Independent of TA, I'm here to teach you basic rules. Y'all just got Timified.